welcome back to the channel, everybody. Here is an exercise case now to the beginner's lecture, General Introduction to Tax Law. And what we have to begin probably with is to practice tax calculations where the income tax is concerned. Here you have a small overview, and naturally we should begin at the beginning. That's Mr. A from Aachen in Germany has had a total taxable income of 100,000 this year. As you know, the total taxable income is the final figure, which is the tax base after all deductions, when all the income has been added up, when the special allowances and extraordinary hardship allowances have been deducted. So we need no further calculations. We can directly use the 100,000 in order to. Now let us have a look to the tax tariff. You know that the income tax tariff in Germany is changed every year. So at the moment we have the year 2021. So we should look to the tariff rules for 2021. Here it said that the income tax is calculated on the basis of the taxable income. Better would be a translation total taxable income. And that has to be calculated according to the formulas here in bold type. We have a total taxable income of 100,000, so we have to look in bracket number 4 for any income between 57,000 and some minor euros up to 2,740,000. The formula is 0.42x minus a correcting factor of 9136.63. So the idea is x is the total taxable income. So the rule is take 42% of all the income. Now for the first part of the income, 42% is too much because you know there is a progressive rate. And to compensate this too much, we have a correcting factor, which we then deduct. And as this formula has been developed by mathematicians or people who know about mathematics, this will be then the exact outcome. This exactly corrects the fact that for the first parts of the income, less than 42% should be due. So what we can do here is now take this formula here, 42x minus 9136, as the basis for our calculation. So we take the tax tariff, then fill in the 100,000 for x, calculate it, and there will be a result. Now let us have a look to the tax tariff. You know that the income tax tariff in Germany is changed every year. So at the moment we have the year 2021. So we should look to the tariff rules for 2021. Here it said that the income tax is calculated on the basis of the taxable income. Better would be a translation total taxable income. And that has to be calculated according to the formulas here in bold type. We have a total taxable income of 100,000, so we have to look in bracket number 4 for any income between 57,000 and some minor euros up to 2,740,000. The formula is 0.42x minus a correcting factor of 9136.63. So the idea is x is the total taxable income. So the rule is take 42% of all the income. Now for the first part of the income, 42% is too much because you know there is a progressive rate. And to compensate this too much, we have a correcting factor, which we then deduct. And as this formula has been developed by mathematicians or people who know about mathematics, This will be then the exact outcome. This exactly corrects the fact that for the first parts of the income, less than 42% should be due. So what we can do here is now take this formula here, 42x minus 9136, as the basis for our calculation. So this time the calculation uses the 2022 tariff. Same idea, same steps of calculation, different result. Now let us have a look to a next example. This is now Mrs. B from Bonn in Germany, who has a total taxable income of 60,000 euro this year, and we are asked now to calculate Mrs. B's income tax on the German tax law for this year. Well, let us first have a glance to the tax act again. It's for 2021, again the same as before. We are in the same bracket, and so we have to calculate 42% of everything minus a correcting factor, which is in 2021 9136.63. And by the way, we should also have a glance in advance to the variant for 2022, who's interested in doing the calculation for this year. This will be then the same principle, but a slightly different correcting factor. So this or this tariff here. Again, the approach is simple. Write down the tariff function. Take x as 60,000, then make the computation and you get that result. Now for the next year, you just change the correcting factor, the rest remains the same and you get a result. Now naturally, people do not always have an income in the same bracket, in bracket number 4. So here to demonstrate this, we have now Mr. C from Chemnitz in Germany, who has had a total taxable income of only 20,000 this year. Now the question is, how high will be excess income for this year? Yeah, the decisive thing here is 20,000 is no longer in the 4th bracket, but in the 3rd bracket. So between 14,000 and 754 and 57,000, there is a complicated formula, which is 208.85 multiplied by factor that plus 2,297. That again in brackets multiplied by that plus something on top. Now all that doesn't help us if we do not know what that is, and so that is a variable which is explained in sentence 4 of 32a. That is that part of the taxable income which exceeds the beginning of the threshold of the bracket, rounded down to full euros, and then divided by 10,000. So this is the formula which we need. It sounds a bit complicated, and so we have to do some calculation steps. Now what we do is we simply take the tariff and then have to compute what that stands for. So here we have a value for that now in a minute, or even a bit quicker. And so when we have it, we can rewrite the formula in the way which comes just now. And then what we then still need is a calculator and compute it step by step. First, turn in brackets first, then the next step, and all all the rest. And so we've got it, ladies and gentlemen. It will be on paper in a second. Naturally, it's clear that also here the formula will change when we go to a different year. So here is 2022, and here the formula for the 20,000 bracket, number 3 was that, has been changed to 106.43 times z plus 2397 times z plus a changed additional factor. And that is now again 1/10,000th of that part which exceeds the last euro of the last bracket, of the previous bracket. And so same basic steps for the calculation, but different numbers to put into the formula. If you just want to see how that would work for 2022, let's try to recalculate our example for 2022. Again, we take the tariff function first from the law, or from the tax act, however you want to call it. We calculate the value of the variable, here that. And after some fight with the calculator, we get a result. And that result is now in a second here. Now we can rewrite the formula using the value for our z. And the rest is now simple fight with the calculator and doing step by step. Naturally, in future years, when it is 2025 or so, when you view that video and you use the tariff function for 2025, and no big change will really happen, only different numbers will come out, the technique will be the same. So I hope principle is understood. Now add some small degree of complexity to the previous cases. Now Mrs. D, who is from Düsseldorf in Germany, has not only regular income but also income from capital 100,000. And she has, in addition to what has also been mentioned before, deductible personal allowances, so-called special expenses, in German Sonderausgaben, and extraordinary expenses, in German außergewöhnliche Belastungen, which are accepted as deductible from the tax base with an amount of 30,000. Where the 30,000 come from doesn't interest you or me, it's just a given information. So we work with that without questioning that. What do we have to do now? Let's have a look, and then, and then think about it. Well, as you perhaps know, for income from capital, there is a special tax rate of 25%. You can find that in paragraph 32d1 EStG. Now, that 25% tax rate is rather described in a complicated way, because if you also pay church tax in addition to income tax, so if you are a member of a religious corporation which subjects you to an own tax, which under German constitution can be possible up to a certain degree, then you can deduct that tax from the tax base, and so there is some indirect modification effect, but in principle it's 25%, which you can read here. Okay, so just let's read 32d1 in a way that it says 25% is what you have to pay on income from capital, and everything else is clear and has no problem. Now let's go on a bit and have a look to the next constellation. Now we have Mrs. E from Essen, which is a city in the German Ruhrgebiet. And he has a total taxable income of 100,000, and in addition to that has a tax-free income of 50,000 from wherever. Now, how high will the taxable income of Mr. E be for this year? That's our question, and we have to think about how we can approach that problem. Now, naturally, let's make the next case a bit more realistic or a bit more complicated, depending on how you prefer to see it. Mrs. F from Frankfurt, Maine has a total taxable income of 300,000, so that is already what remained after her special expenses and so on had been deducted. Additionally, she has an income from capital of 100,000. Furthermore, she has some income which is tax-free under a double taxation agreement with another state. That income is 200,000. Last but not least, just to make your lives more complicated, Mrs. F decided to sell a house which was private property after she had possessed it for 20 years and made a gain of 100,000. And on top of all that, she also got an inheritance of 500,000 euro. Now, how high will the German inheritance income tax of Mrs. F be this year? Now, when you think about this, your basic approach must again be, okay, here Mrs. F has a higher income as what is taxable, because she also has tax-free income. So for the determination of her tax rate, we must have a look to her worldwide income, to that what would be taxable if there were no tax exemptions in play. So that must be our first approach. And now the important thing here is that there is a tax exemption for the double taxation treaty agreement income of 200,000. The gain from the house, however, is under the rules of German income tax not even taxable income. If you sell off a house after 10 years, it would not count as income at all. It's no longer covered by the 7 types of income, so it doesn't count. The same with the inheritance. It's not a part of the 7 types of income, so it's not a part of the worldwide income, so it does not count. So the only amount which counts here for the determination of the worldwide income, for the tax rate and so on, for that auxiliary calculation, the proviso safeguarding progression, is only the 200,000 which has been named here. So let's solve the case on that basis. Let us now go on to the tax calculations for a married couple. And there we have the first simple case here. G1 and G2 are a married couple and both live in Germany. G1 has a total taxable income of 80,000. G2 has a total taxable income of 50,000. Now, the only thing which you really need to know is that the basic principle of the joint income taxation or splitting procedure for married couples is that one treats the two spouses as if both of them had the average income. So they will be treated as if each of them earned half of the other person's income. Yeah, and that directly leads to a simple result. This very simple logic that you look to the average of the income of both also applies, or even applies, if one of the two partners has losses. So also losses would be distributed equally between the partners. If you know that, the outcome is again clear. after you got the basic principle of that joint assessment procedure, the splitting tariff, you will even be able to understand what happens next if one or two of the spouses have tax-free parts of their income too. Because you remember, when somebody had tax-free income, then that remains tax-free. But for the computation of the tax rate, one wants to determine how wealthy a person really is, so that then an auxiliary calculation is necessary. So let's look to the case situation. Taxpayers I1 and I2 live in Ingolstadt in Germany. And I1 had first a total taxable income of plus 20,000 euro, but then lost the job and got for the rest of the year financial support from the state institutions for the support of the jobless. They are tax-free income under income tax aspects. That was plus 30,000. Now I2 is the proud owner of a business and had a total taxable income of 100,000 from the German headquarters of the firm. However, a part of the business is established abroad, and in that foreign permanent establishment this year brought a loss of minus 50,000. However, that foreign permanent establishment has been qualified as tax-free by a double taxation treaty of Germany with that foreign state. So that all that income, be it positive or negative, from that permanent establishment is, although it is a part of your worldwide income, regarded as tax-free in Germany. So this is now the case data. And now we have to find out how to deal with that. The principles are simple, so let's just do it. Now, a final case that is then sufficient for today. Now, K GmbH from Cologne has a total taxable income of 30,000 plus tax-free income from abroad 170,000. How high is the tax to be paid for 2021? That's also a good question. Try to find the solution and compare with mine. Okay, these were my remarks concerning tax calculation, and other exercise cases or other exercises will follow. So thank you very much for watching for today. I think it's enough for today, and I hope to see you back soon on this channel. Goodbye.